we have to start, now that we understand the way in which we run the numbers a bit and how we position trade, we have to start going and looking at when do we take those position trades. So we're going to erase all this text on the screen. Well, maybe we'll leave this one on here. And again, you have to just start defining the bigger technicals and having reaction points off these larger events, because it's these larger events that we have to trade. So here's something that I see happen. People love the idea of day trading every single day. So they get stuck in this rut of wanting to be the grinder all the time. And being the grinder is fun. And it's exhilarating. It's kind of very alluring, right? You get a rush off of it. You trade and you make 40% and you trade another trade and you make 80% and you're up 100% and you show your friends and you're excited. And I've seen it time after time. I've seen it in Discord. I've seen it in private messages, mentees, non-mentees. Like I've seen it everywhere. People just get euphoric when it comes to making a couple really good trades in a row. So they get that euphoria and they allow it to kind of consume them. And then they start doing that all the time. So then they decide that, oh, this is what I'm supposed to be doing, is just being this crazy grinder, slinging in and out like a crazy man kind of thing, right? But which is fine. But you need to have the position trades too, because they're very easy and methodical to plan. They're very easy to take. You have kind of these larger levels, right? Like here's a good example. What happened when you hit this hold level back here, right? What happened when you hit this hold level back here, right? This was a methodical trade. It's up 46%. This is simply just a hold level. And all we had to do was wait for it to get hit. And there was a couple other trades off of it too. Look, there's one right here. So you could have probably made your first 15 or 20% here. Let's take the magnet tool off for this part of it. You could have made your first 20% here, and then you could have made another 20% there. From here to there, you could have made another, let's just call them both 15. So you could have made 30%, or let's say we didn't even exit there. Let's just say we made 15 on the first and 40 on the second, right? Let's just say we sold this here, right? That's 55% on leverage. That's 5,500%. If you were in for $150, that's like or something ridiculous that you made off of $150. So this is the kind of thing that can double and triple your account overnight, and it costs you almost nothing, right? So they're very methodical. Again, I keep using that word, but I can't stress it enough. It's like draw the strongest levels on your chart, be prepared for when it happens, and when it happens, take your trade appropriately. And let's draw out another scenario here that we're talking about taking your trade appropriately. Okay, so we're not going to short this level. This is more of a grinder level or maybe a position level. Sorry, not a position, maybe a swing level. This one here, same thing. I would feel very comfortable maybe taking this as a short right here. So saying, I want to short this level here. Okay, so I want to short this level here. So fine, you come up to this level, you short, your short gets you liquidated, and you're like, oh man, I lost $150. No big deal. It's such a small amount of money. So then you can just reshort this level, and you're like, oh yeah, that's great. I lost $150. Let's just reshort this level. But hey, guess what? This gets you liquidated too, and it takes a big run up to here, right? Makes a new trend. And so you have your next position, right? I'm going to say it's right here, this inverse level. And then you take your third short, and this one works out. And you're not going to fail two all the time, and you pull right back to trend. And how much did you make off this trade? Because it was methodical. Doesn't mean you can't continue grinding your every single day positions. It doesn't mean you can't go and trade like a crazy man and go and be in 20 and 30 trades a day to have your daily income. But this will make you like 5 to 10 grand off $100, like, or $150 or $200 or whatever, right? So fine, you lost 150 twice, and in that process, you made 30%. Like, who cares, right? So you have to kind of, it's kind of this tone, right? Like there's this methodical nature to it. Again, I keep saying that word, but it's true. It's like you mark the strongest levels and you be prepared to react to them as long as your technicals are accurate. And it's not hard, right? Like you guys see it right here. Here's one, here's another. You mark out your important levels and you go and and there could even be stuff back in here. Like, you could be even in the next range of this move on Bitcoin, which is, somewhere up in here. You could even be in this next range up here. Who knows? I don't know what Bitcoin's going to do. I haven't really been analyzing it as of much lately. And I have to see how it reacts. Just like you guys, we all have to see how it reacts before we make those decisions. But who cares, right? Like it doesn't matter. yeah, you can lose a few of these position trades, and the one or two that work out, these won't disallow you from trading every single day. So there's got to be a clear separation there between methodical trades and everyday grinding and scalping, right? So let's look at a few more technicals here before we move on. So we're going to delete these. I mean, there's not much more to look at. I guess we can draw out the scenario on something else. Maybe we'll go to Ripple. People seem to love Ripple. Yeah, you know what? We'll go to Ripple. And you can leverage trade Ripple, so there would be nothing wrong with taking a look at this and taking some trades here, right? There would be nothing wrong with it. That. Here. Adapt it to here, right? Like this. Let's do this properly. Let's walk through this properly, actually. You'd be here. Yep, that's actually the correct level. You'd be right there. And you'd be looking here as your first break. So actually, this broke perfectly, probably to the hour. This is the way this stuff always works. It kind of breaks right to the hour, right? So like you break this and you move up quite nicely. So this was like perfect trade. That's fine. This looks good. Let's start looking at the next set of technicals it would break, which will be this, which I'm not convinced is anything. I think you're just going to have to go into an accumulation period. So you probably inversed off of this, right? Like this is probably the level you inversed off of, or this right here. It would be this right here, be the valley right here. Come on, magnet tool. Let's look for the more important level. Let's not settle for that. So that would be this right here, which it pulled back off of. And then so you're looking for the hold level in there. This is simply just creating its cycle against that. So this kind of becomes the perfect area to short. So you short that level, fine. You would have shorted this, and you want to see, you know, what it's been respected here. There's another nice long here. This is just going through an accumulation cycle. So there's no big moment to be had here, right? You would have been here like this. This. Make sure we do this from the weekly. Pin this up properly and not just kind of guess on time frames. You would have been there and you lose trend there, which is fine. And now you're here, right? So this is what you're looking at right now. You're looking at, and you can even just pull this out just to see where the trend is. But this trend isn't going to give you a big amount of fuel to move this thing up. Instead, what you're going to do is probably break this trend and pull back to the base of your range to see if you can break this a little later in the future, or even as a minimum right here. So this is not really anything to be writing home about. Ripple doesn't look overly great here. The move already kind of happened. I think more of the action is on Bitcoin. But if you wanted to take a position trade as a secondary coin, I would chart Ripple like this, and I would say there's nothing really great. More so, you want to kind of let this mature out for another month or two. So maybe let's look at a different coin. What about Ethereum? I guess I just have to go ETH, right? Let's check Ethereum. Ethereum looks like it needs to mature as well. Right there. So Ethereum looks like it might be trying to set up a move, right? Actually, no, it's also not trying to set up a move. It is a little too far away. So I think a lot of these altcoins are going to be just like this, perfectly set to have kind of a break in the near future, right? Like this is going to be right here where you break trend to trend and you start to move up and you've hit your valley and you're going to pull back. There's no bigger set of technicals to break here. Maybe from here to there and from here to here, possibly. There's no bigger set of technicals. So what's something else? Let's try Monero. Why not? We're just going to go through a few. This is what I'd be doing. And I wouldn't even be looking to take any of these positions until it actually made sense. Monero already had its break. Not going to touch that. What would be another one we could look at? ADA. We're not going to bother with ADA either. I think that's had its move up as well. Good one to look at. Let's look at metal. Yeah, metal needs time. This is not something that I would be looking at too keenly. This, again, needs time. You're going to have a bigger move out to here. About VeChain. Again, another coin that just doesn't really have a break in the move. It already had its move right here. Sets up there. Breaks here. VeChain is getting kind of close, but then it's going to have resistance against this trend. I don't really love this. I don't think it's overly great. I think it's okay. It's not bad. I think this is better than all the rest that we've seen so far. So to date, I think this is kind of the trade that I would be looking at. Maybe VeChain. It's been laddering quite nicely. This would be a nice position trade to take with some leverage. As long as this ladder continues, as long as Bitcoin doesn't do anything crazy, obviously if Bitcoin dumps, these kind of pairings are going to dump. But this would be another one where you could take maybe $150 and long a Bitcoin position, take $150 long this position. It would be relatively safe. So this would be a scenario where you could take 2 coins maybe and look at, okay, how do we take more than one position trade, right? So you could kind of double dip here. Be careful. It's a lot of management. And we've done very limited TA, right? We've done very limited amount of TA here. Let's actually go and see what the rest of this looks like. So you actually just broke trend on this. You could be setting up a move down as well. So you've got to be really careful here because you might have a pullback down. So maybe you'd be looking to relong somewhere above this as long as this leg doesn't get hit. So maybe somewhere in that region you'd be looking to long. So let's see if there's kind of anything here. Or you've already tested that. You're coming here. Yeah, I would say maybe even be super greedy on this and look to maybe long this again. What it looks like is going to happen is it's going to kind of come down to here and maybe hold something like this and then have its move up, right? It might be under that same timeline that the other coins are under the same kind of duress that Ripple and all these things are setting up for this kind of March push up, right? Like this is kind of what it looks like. So I wouldn't be overly excited to get into this either. I think it looks better than the rest. If it continues to hold through trend, right? Like you want to be drawing your ladder here and you want to be going to your charts and you've got your clear level right here. If it can hold this out into a week from now, if you start getting into this range in 4 or 5 days, it might be something that would be worth looking at and then taking and setting a pretty tight stop or waiting for it to push down to this level and then taking it out here closer to the 11th or the 12th. So remember your timing. Remember, timing is key. Timing is going to tell you everything you need to know about these trades. It's going to tell you when to get in, when to get out. But this is a great breakdown of how to look at position trades. It's a great way to build your account. It's different than grinding every day. Our grinding account should be larger than our position trading account, just because position trades, you don't want a lot in a position trade account because position trades can go south very quick, right? You can make 30%, but you can also leave something overnight and wake up and you get liquidated. Like it happens frequently, right? So you want to avoid that as much as possible. So you want to just really be methodical in your choices. And we're going to go back to BTC and just look at a few levels here. Be methodical in your choices, right? Take the smart trades where they exist. These are very simple. Hey, let it touch here. This doesn't affect your ability to be day trading. You're still day trading your active account. Every single move up, every single move down. The only difference is you have an open position that's going to allow you to make 40% of your entire account at times, right? So this is a great way to treat position trades. There are other ways to treat position trades, but when you're building an account, this is the way I recommend doing it. This is the way that I've done it for years. This is how I've built my accounts. You can increase leverage on position trades and you can make these home run swings, but it's not going to be conducive to building an account because it only takes 1 or 2 mistakes to lose a lot of money, right? So this is great for building an account, and that's why people are here, is to build an account and to continuously have positions where you're making lots of money and there's very little risk. High reward, super low risk, right? So I think this is good for position trades. I don't think we need to go much over it. More, this is understanding that there's a methodical nature to this. Again, with that word methodical, there's a very methodical nature to this. There's a very well thought out process, and there's a ton of reward for risk, and you have to have patience, and you have to leave these positions open. And I think that's part of where people make a mistake. I think part of where people make a mistake is they don't leave their positions open long enough. They over risk and underdeliver, right? They put too much risk in it, which makes them nervous. They put too much money in any one specific trade. That naturally will make them nervous. And then from that point, they're so anxious to get out of a trade, they never let it materialize. Like, it should be okay to have some money in some trades. Like, your account should be, when you're trading leverage and contracts, you should be split into different things and not diversified to be diversified, but action diversified. It's a different type of diversification. It's not diversifying because you want to have 10 different coins. That's the wrong type of diversification. The right type of diversification is action diversification, or diversification categorizing or type, right? The type of diversification is the important part here. Not that we have 10 coins because we have a diversified portfolio. That's completely wrong. Having a diversified portfolio is silly. Rather, you should have diversified position types to allow you to multiply your gains and reduce your risk. You shouldn't be 100x of your account in one trade with a 5% stop loss and lose 5% of your account. That doesn't make sense. It's too tight. It's too limiting. This is something I tell people to do as beginners, because I don't want them, like, as we are beginners in trading, as a beginner in trading, you want to reduce the amount of confusion. So as a beginner trader, it's okay to risk more leverage so you can watch and kind of hand tailor your craft and your position. You can watch it like a hawk, and you have one position to watch, and you know, if you flinch, you can get out and make 10%, and you made 10% of your account, and that's great. That's different. That's very different, because that is, you know, all hands on deck. You have nothing else to watch. There is no risk of losing, absorbent amounts of money unless you walk away just crossing your fingers hoping for the best. If that's what you're doing, you deserve to lose money. But as a beginner trader, it's okay to over leverage because it's less hassle, less stress. There's more risk involved in it, of course, but you reduce the risk by being able to watch it more. As we get better at trading, we need to have a multitude of positions that we manage, because we are creating a everyday routine where we are trading actively. We have position trades. We have different types of diversification in the way we trade, and not diversification in, I have 12 different stocks. Some of them must go up. Of course. Maybe half of them will go up. Maybe half of them will, I don't know. But if you have 12 different stocks, I'm sure you're going to make money on a few of them at least. But that doesn't make it smart to trade like that, right? So this type of diversification is very advanced. It's very conducive to reducing risk and increasing your rewards very largely, while almost having no negative impacts. So it allows you to, like I said, going over this last time, it allows you to continuously day trade every single day, still be a grinder, still have your daily salary, but then have your other positions that you manage as well, right? Okay, everyone. See you on the next one.